Topic 1. Donald Trump's election victory impacts financial markets with significant stock market gains and potential economic policy changes. Donald Trump's victory in the 2024 U.S. presidential election has significantly impacted financial markets. Following the announcement of his win, the stock market surged, with major indices like the Dow Jones, S&P 500, and Nasdaq reaching all-time highs. Bank stocks and small-cap stocks saw substantial increases, with Tesla's shares jumping nearly 15%. This surge is attributed to expectations of Trump's pro-business policies and regulatory rollbacks. Trump's election has sparked expectations for changes in economic policy. He has outlined plans to stimulate economic growth through tax cuts and deregulation, which could lead to a revitalization of the mergers and acquisitions market. Additionally, Trump has expressed support for the cryptocurrency industry, aiming to make the U.S. the capital of cryptocurrency, resulting in Bitcoin reaching record highs. However, concerns have been raised that Trump's policies could trigger inflation. His tariff policies, in particular, may increase price pressures, potentially affecting the Federal Reserve's plans for interest rate cuts. Trump's election could also create tensions in trade relations with Europe, possibly leading to a depreciation of the euro. Overall, while Trump's election has positively influenced financial markets, there are also concerns about long-term economic policy changes and the potential for inflation and shifts in trade relations. Topic 2. Federal Reserve's anticipated interest rate decisions in response to economic shifts post-election. The Federal Reserve is considering interest rate cuts in response to recent economic conditions and changes following Donald Trump's election. The Fed is expected to lower rates by an additional 0.5 percentage points from the current range of 4.75% to 5% by the end of 2024, with a further 1% cut anticipated in 2025. This is due to inflation nearing the Fed's target of 2% and the economy approaching a soft landing. While Trump's election has positively impacted the stock market, there are concerns that his policies could worsen inflation. Trump has shown intentions to undermine the Fed's independence, suggesting that presidential opinions should influence rate decisions. However, the Fed maintains that it operates independently based on economic conditions, unaffected by political pressure. The Bank of England has also lowered its rates from 5% to 4.75%, reflecting a decrease in inflation to 1.7% and easing price pressures. This rate cut appears aimed at reducing borrowing costs to stimulate economic growth. The Fed's decision to lower rates is a response to slowing economic growth and the job market, and it may need to adjust the pace of cuts due to the potential inflationary effects of Trump's policies. The Fed plans to adjust its rate policy in line with economic conditions while maintaining its political independence. Topic 3. Global trade and tariff concerns following Trump's victory, affecting international markets and industries. Donald Trump's election as U.S. president has raised concerns regarding international trade and tariffs. Trump has proposed increasing tariffs on imports, particularly planning to impose tariffs as high as 60% on products from China and Mexico. These policies have negatively impacted international markets, particularly causing declines in European and Asian stock markets. European automotive manufacturers and renewable energy companies have seen significant drops in their stock prices due to fears surrounding Trump's protectionist policies and plans to roll back green energy regulations. In contrast, the U.S. stock market has shown an upward trend, with companies in the defense sector and Tesla experiencing substantial gains. This situation highlights a stark contrast between the U.S. and international markets, increasing uncertainty regarding global trade. Topic 4. Nissan's restructuring and job cuts amid economic challenge.